Hi everybody, Stephen Green here, RBC Royal Bank Mobile Mortgage Specialist. I wanted to chat about all of these mortgage rules that just recently came out. It's been a couple of weeks since it's been announced, and I've been waiting to do a video because I wanted to see how everything transpired. Obviously, when an announcement comes out, and to let you know, the banks don't even get any notice when this is coming out anymore. We have no time to prepare. It's announced, and then we have to basically react and make sure that we can take care of our clients going forward. So a few of the rules that have come out, the bigger ones, obviously the biggest one of them all is the quote stress test they're talking about. In the banking world, we've always had that. It's called using the qualifying rate, but we only had it when we were using a rate other than a 5-year fixed or higher. Let me give you an example. If you do a mortgage and you take a 5-year fixed or higher, and let's say the rate is 2.5, I'm making the rate up. When we work out whether or not it's affordable or not, we use the real payment you would actually be paying. So if the rate's 2.5, you would get your monthly payment we use towards affordability is that amount. However, if you take a variable or any fixed term less than 5 years, so a 4, a 3, a 2, etc., we would use a mortgage payment as if the rate was 4.64. Because we want to make sure once you get to maturity on that mortgage, or if the rates change on a variable, you can still afford your house. Obviously, that's a priority. But now what's happening is no matter what, you still get the great low rate, but we have to work out affordability as if the rate was 4.64. But you still get the lower rate on the 5-year fix, the 4-year, whatever the case may be. So the government wants to make sure that if you do start a new mortgage and you increase your overall debt level, new cars, whatever, you can still afford this if rates start to jump up. Some of the other things, if you're a non-resident, there's no longer the principal residence capital gains tax exemption. So whether you're a principal residence, whether you're selling your principal residence or an investment property, doesn't matter. You are subject to capital gains tax. That probably is a good news story for the Vancouver-Toronto market. Not a bad thing considering everything that's come down the pipe and the way those markets have increased in value. Another one that does become more important, we'll see how this plays out in the next year or so. When we do a default insured mortgage, so if you have less than 20% down, the government is now saying that the lender, being the bank or whoever it is, must share in the responsibility of that mortgage, the payout of the mortgage in the event of default. So in the past, if we did a mortgage and there was default insurance on it, and the default insured or the client stopped paying their bills, the insurance company would pay out 100% of the proceeds, right? Here you go, bank, we insured it, it defaulted, here's your money. Well, now what's going to start happening, and there's more to come on this, we don't know exactly how it's going to look, but the lender is going to have to share in that responsibility. So because we've got to share in the responsibility, you could possibly see rates increase because we've got to make up for that increased risk. So more to come on that. A lot of changes we're seeing in the broker world or the monoline lender world, which I'm not 100% fluent in, just to be completely honest. There are some changes coming to them relative to policy on investor, self-employed, group, default insurance packages, stuff like that. So by no means a subject matter expert, but there are changes coming there as well, specifically in the broker world. Because I know with RBC, if we do an investment mortgage or an investor mortgage, if we go 20% down, we don't require default insurance. It's done conventionally. So that's a bit of a summary. And again, I waited 2 weeks because I wanted to see what it looked like, how the dust settled on everything. But I think that's what we're seeing out there right now. There is more to come, again, in particular on this whole default insurance and the lender sharing the responsibility on the whether if a loan defaults and us having to pay out part of it. I think that you may see some move in rates there. Anyway, more to come. If you have any questions, again, Stephen Green, RBC Royal Bank Mortgage Specialist. Reach out to me and more than glad to chat. Thanks so much. Bye-bye.